Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their business and digital transformation projects, and we meet the entrepreneurs, innovators, and fintechs that make it all possible. On today's episode, we're meeting with Jeff Kline, the president and CEO of Members Development Company, who has recently announced his retirement. We're going to talk about his history, his legacy, and where he thinks credit unions are going from here. If you're ready, let's suit up and get out on the field. Jeff, I wanted to say thank you very much for joining us. I'm so excited to have you on the pod today.
It's wonderful to be here, Kris. It is always a joy to get to hang out with you.
Well, my friend, as I told somebody else, I consider you, I don't know that I've ever said this to you, but I consider you a mentor, kind of like an uncle to me in the credit union movement. Although you're a little bit older, but not too much, right?
Yeah.
But it's
plenty.
But it's one of those where it's like, I really feel like I've seen you throughout a lot of my career. And for me, that's been watching you has been very formative. So I wanted to take the opportunity on this pod to say thank you and to try to learn as much as we can from you because you've announced your retirement.
I have. It's my wife and I have been talking about it for a while, and it's just time. It's been a great a great run at MDC, and we've accomplished a lot, which I'm sure we'll get a chance to talk about. And I'm really excited for some new blood and new thoughts. And it's become more than I ever thought it would. And I feel like it's reached a point where someone else can come in and take what we've built and take it to a whole new level. And so I'm really excited for MDC.
Mm-hmm. But MDC is only one part of your entire career. You've been in the industry how long?
40 years.
40 years. Just
40.
getting started.
Yeah. That's not what my body says.
Amen.
Yeah, 40 years.
Can you walk me through how you got started in the industry?
You bet.
And ultimately, what led you to MDC?
Yeah, that's great. I feel like my career has been a combination of a lot of luck and a lot of hard work. I've always considered myself one of the people in the hard worker camp, but I started out in public accounting at one of the big firms. One of my clients was this credit union called U.S. Central Credit Union. And, it was this little organization that at the time had about 12 employees and $2.5 billion in assets. And, I being right out of college, I thought, this has got to be a sting. There's no way I can't even put all these numbers on my balance. Back then we didn't have computers. I couldn't even fit all the numbers on my accounting paper. They can't have just 12 employees. And I just knew I was going to catch them. But I ended up going to work there as the EVP of finance, and did that for a few years. Had the worst boss a person could have. But sort of got this credit union bug, and this guy named Larry Knoll hired me. To this day, Larry's passed. One of the things I would have loved to ask him is, why did you hire me? He hired me to basically be his chief retail officer. I'd never set foot in a credit union in my life. Except once. I went to try to join a credit union when I worked at U.S. Central, and after standing in the teller line for 45 minutes to open an account, I decided I was going to stay with my bank. And so Larry hired me to run his retail operations. I did that for 5 years, went on to become CEO of a credit union for 5 years, and then moved back to Kansas City, which was home, and was chief retail officer at Community America for a few years, CFO for a few years, and then Dennis Pierce, the CEO, kind of said, I probably can't say the words he actually said, but you're making us crazy. I was just a little too entrepreneurial, a little too sort of profit focused. And he said, we really need someone to get us into the QSO world. Would you do that? So we started a holding company. We bought a consulting firm. We pushed our mortgage department into a QSO. We started a finance company and a payday loan company. And then I was in the credit QSO world, and I did that for about 6 years, and then this thing came along with MBC, and I went, huh, a QSO for a bunch of big credit unions. That sounds like that could be fun.
Mm-hmm.
And I've been here 17 years now.
17 years. Is there a correlation, you think, to moving and changing roles and developing a healthy attitude toward change? One of the things that I've just anecdotally seen is that there's some folks who, like, they get with a credit union, and they just stay and they stay and
Mm-hmm.
they stay and they stay and they stay, and well, they
Mm-hmm.
can be successful in that
Yeah.
organization.
Mm-hmm.
I think sometimes they lose the adaptability. They lose the comfort with change that someone like you, who has moved through different roles, kind of builds that up. And then ultimately you join organizations that seek change, like
Yeah.
NBC.
Yeah. Yeah. I think correlation's probably a good word for that, Kris. In that you probably, if you don't lean that way, you're probably not going to jump into those things. I mean,
Mm-hmm.
when I went to work for Larry at 666 Federal, he'd been there about 6 months, and we were in the midst of completely turning the organization over.
Right.
When I left there, these guys hired me to be their CEO, and it was a complete disaster. Now, maybe I was the only one dumb enough to take the job, so maybe the correlation there was, I mean, I was very young. I had just turned 31,
Right.
and
Wow.
and so I didn't know any better, and for them to be desperate enough to hire me, maybe no one else wanted the job. But so I sort of leaned into that.
Mm-hmm.
When I went to Community America, it wasn't it wasn't a mess like those prior two trips, but they were early in developing a vision and a future for so having gone
Right.
through rebuilding two organizations, you sort of see a path of how to help one go from, they weren't at step one, they were at step four. How do we get to step 10? And
Right.
so I think there is a little bit of you like change, you lean into it.
Mm-hmm.
And so you have some of that in you, and then you can also develop the skills to get good at it.
Right. Right. Yeah. And it's so very important, as whether you want to or not, the market's changing so fast around you. You've got to be comfortable with change.
Right.
Right.
Well, yeah,
And
today you don't have a choice.
yeah. What are the type of challenges that you see in the industry that are really, you think, kind of driving what's happening today?
Well, uh, competition has to be number one. It's just, you could go back and say, and, not, I don't want to go back to the history of credit unions, but the competition we had in 1983 is very different than the competition we have in 2023,
Mm-hmm.
and so the variety and the quantity of competition, and you can see it. I mean, you can look at our interest margins, and you can see them in a 30-year death march from the early
Mm-hmm.
90s to today, and that's we've had cycles, but the trend lines, while they aren't pretty because they're negative, they're very pretty statistically speaking,
Mm-hmm.
and that they make a nice regression line downward. So I think that's an issue that it's not going away, and it seems to only be intensifying. Regulation seems to be, layering on, and all of a sudden you're just sort of like the frog in the water. You're just almost buried in it. And I can't even, I'm lucky enough to have never worked for a $10 billion credit union in today's times, and the staggering amount of regulation they have to contend with. It just, you get bigger and bigger and think, oh, I'm efficient. Now you just added, measurable basis points of overhead just because you crossed this magical line. And technology is insane. I I feel so blessed that I'm not that as AI rolls out, I'm running away because the potential implications of that are really exciting and really scary because it's
Mm-hmm.
just going to be a lot of change. Um, and I hope as an industry, something sinks in quicker, that we adapt to this faster than, hey, we have some historical changes that we've dealt with, because I don't think this one's going to be very forgiving if you get too far behind.
Mm-hmm.
The ability to catch up may not be there.
Yeah, I think that's very well put. One of your roles at MDC has really been driving innovation in credit unions, right?
Hmm.
Um, is innovation the answer to solving these problems, in order to help them maintain or reverse some of the trends you're talking about?
So I think innovation is is important. I think for credit unions, collaboration is maybe the most important thing. You know, I mean, let's take Navy out of the conversation and maybe, state employees
Hmm.
or Pentagon, but even a $20 billion credit union is not a large financial institution. And
That's right.
we all, all of us worry about a $100 million credit union, or a $50 million credit union, because the work it takes to run that credit union, is kind of the same back office and everything that you need to run $1 billion or a 10 billion, to varying degrees. But so that you have this certain amount of, just to open the doors as a financial institution, I have X expense,
Right.
right? And so as you start going, and then I got to pour money into member experience, and I really want to take care of my members, and I want to give as much of my margin back to them as I can, and on and on and on. Things like innovation and strategy and is more overhead, and to be
Mm.
exceptional at it, it costs a lot. Well, those are things we can collaborate on.
Hmm.
Not that every credit union is the same, but fundamentally we have a lot of homogeneity amongst big credit unions, and there's a lot of things we can do together and spend the money once and enjoy it 100 times rather than spend it 100 times.
Right. Right. Is that something that has it always been that way? I feel like there was in the heyday. I want to say that I say the heyday of credit unions is like the 70s to
Yeah,
early
right.
90s, right?
Yes, right, right.
Was there as much collaboration then as we're seeing today? Were they as innovative then? I mean, how has the industry changed from then, in your experience, from then
Yeah.
to what we see today?
So I feel like there was more collaboration. There was more conversation. I mean, I don't know if you were around when credit union chapters were really a big
Right.
deal, but
Yeah.
I mean, most all the credit unions got together at least once a month and they talked,
Hmm.
and they bring in some speaker, and we are way more innovative today than we were back then, but we were hyper collaborative back then. We didn't have,
Interesting.
very few of us competed with each other, so we really did share with each other.
Hmm.
um, I'd say today 95% of the credit unions get along with 95% of the credit unions. I mean, there might be a few that nobody likes, and
Right.
and everybody may have the one or two they just assume not share all their deepest, darkest secrets with. But
Sure.
we still work well together. I think that's part of what makes MDC what it is that the spirit of the credit unions who are part of it believe in collaborating. They believe in working together. They don't compete with each other. Some of that's, we have geographic dispersion on our side, but even those that are close to each other, there's something in their DNA about the way they collaborate with credit unions that makes it work.
Hmm.
Um, so I don't think credit unions were nearly as innovative back then, but the pace of change wasn't the same back then.
Yeah.
I mean, when I started at 66 Federal in January of 1984, um, no, 86, sorry, I got my years. You know, we made retail loans. We didn't have, one of my first projects was, should we do credit cards?
Hmm.
And then the next thing was to start a mortgage department, and then
Hmm.
the tax laws changed and we created the HELOC. And but very few did indirect lending. And there, what's a fintech, and what's a fintech loan, and point of sale and point of purchase, and those. So and then technology. I mean, when I was at US Central, I had to. I am essentially the EVP of finance, and I'm trying to persuade the CEO to let me buy a PC. We had none. A PC XT. I mean,
Yeah.
and so that's the technological world we lived in. He would not let me have a printer. Well, then I noticed one day we had these old, I don't know if you remember the old IBM Selectric that had the ball on them, and right.
Yeah.
So I noticed the cable on that was the same as the back of the as the port in the back of the PC, and I plugged it in, and it worked just like a printer. I could drop a piece of paper in there, and that Selectric would just work just like it was any printer that you could buy wherever it was we would have bought
Holy
them back then.
cow.
Yeah, so that was our first printer, who was an IBM Selectric typewriter. So you try to go through the generations of technology changes, and then delivery channels, and then
Hmm.
competition. And you've heard my analogy about the Rubik's cube, right? And it's like,
Hmm.
we're doing. if you think about the number of channels and the number of products, and then times the market, maybe the market segments you serve, and you have this cube that's probably, 6 by 8 by 9, and those are all battles you're fighting
Yep.
for, a certain member through a certain channel to, with a certain product. And it, it just, it, it was just, it's multiplied the
Yeah.
complexity of our business, right? So we have to be more innovative just to keep up.
Do you think that trend continues in the future? Is it going to continue to get more competitive, more innovative, more technology driven? What does that look like in your mind?
There's a small part of me that's worried that at some point, we see consolidation,
Right.
whatever it is, 40 credit unions a quarter, or,
Yeah.
it's a few percent of our market. The, there's a part of me that wonders what's going to be the thing that just completely changes it, and consolidation turns into 500 a year, and then we end up with, you know, 300 credit unions,
Right.
whatever, and why
Yeah.
is that a magic number? Like, what makes them that they're going to survive anymore either? So, there's just a fear that the competition, something will happen that all of a sudden we'll go from hundreds of competitors to, a smaller number because
Mm-hmm.
there's fewer of us. Is AI that thing? I don't know. When um, I sort of I touched on this a little bit a couple minutes ago, but
Mm-hmm.
when I think you and I might have been together in Hawaii talking at that event, and we
Yeah.
started talking about AI, and we started talking about, saving money, and the volunteers in the room were saying, well, we can't cut our people. That's not who we are.
Right.
And I don't think we said it there, but what has gone through my mind is I've started talking to the MDC credit unions and talking more to the leadership of, the management, is, okay, would you rather be the CEO of 60% of your employees, or would you rather all be unemployed? Because
Mm-hmm.
if we stick our head in the sand, and even someone like B of A that I don't think we all consider a real competitor, all of a sudden gets 40% more efficient, and now they can just flat out come after you with rates, then you have no employees.
Yeah.
And I know it's not all about rate, but let's face it. The other thing that I know that we've talked about before is that chart of the is it ACSI chart of
Oh yeah.
consumer satisfaction, right?
Yep.
And we've
Yep.
seen where we just dominated that from the 90s, the 2000s, and then somehow there's this weird thing that started happening around 2014, and I contend it's because of mobile banking.
Yep.
That what percentage of our member transactions that used to be human, where we were great at and banks sucked at,
Yeah.
and I mean, I can tell you, I mean, you lived it.
Mm-hmm.
You'd have new members come in the door because the bank down the street just pissed them off.
Yeah, literally.
Well, right, I know. And so the more that stuff goes digital, and the better the banks are digital,
Yeah.
not only are they not pissing people off, we're not wowing them because our employees don't get to talk to our members either. And so,
Yeah.
if it just becomes about rate or convenience or your digital tools,
Yeah.
how are we better?
Yeah. I'm not sure I'd ever considered, Jeff, the idea that AI isn't just about expense reduction. It's about them being able to take those dollars and redeploy them to customer acquisition,
Hmm.
right? Through offering of rates and services and new products and things like that. That is a very dangerous place for institutions to live if they are not competing at the same level.
Well, and what if their bot now is, we think about the perfect way to serve a member face to
Yeah.
face, or, over the phone, or, a human interaction, and the best way to do that, and the way to be empathetic. And
Mm-hmm.
well, now their bots can do that. So
Mm-hmm.
if their bots can do it as well as our really genuinely caring employees,
Right.
what's our competitive advantage?
Yeah. Wow. And and you don't even know. I bought a service 2 weeks ago, and I had filed a request online. Hey, somebody please call me about the service, and this chat pops up, right? And I'm like, oh, okay, well, let me do it through the chat. I bought the whole service through the chat. I don't know that was a live person or not. They answered every question I had. I bought the service from them. 2 days later, people are calling me, right? And they're saying, hey, would you like to have the service? And I said, I bought it from your chat bot. And they were like, oh, Okay. So, I mean, I think to your point is like, it may get to where you don't even know if it's a person or not.
Right.
Hmm. You mentioned chatting or talking and speaking to board volunteers, right?
Mhm.
And one of the things that makes the credit union just so amazing is the fact that you have these mostly volunteer boards,
Hmm.
right?
Yeah.
Who come from the communities, who come from the employers and the groups that are represented by the credit unions themselves, who volunteer their time to provide guidance and governance to the
Hmm.
organization. Are they, in your mind, scared enough about the future based on innovation and technology challenges that they're seeing, that you see in the broader
Yeah.
marketplace?
Well, I would say, I have to generalize here because I don't get to talk to as many volunteers as
Right.
I once did, but I would say no. Um, I think that some of that is because they aren't as informed
Mm.
as we are. They're not
Yeah.
as exposed to all the things. Um, I think part of that can be that um, I still don't know if we as credit union leaders are maybe quite as afraid. That's a
Mm-hmm.
strong word, but I've had some of my owners push back on me when I get a little preachy like this that I'm being too negative.
Mm-hmm.
Um, and maybe I am. And maybe I'm just old crotchety get off my lawn guy now. Um, but I'm scared. I
Yeah.
I think that we it's always easy to go technology created 10 years, look back and go,
Yeah.
we survived. I think
Yeah.
I think I think mobile is like that.
Mm-hmm.
I think that I think we're recovering. Like mobile's becoming ubiquitous, and now we're probably as good as the any bank, and it's just all there. And now it's just
Mm-hmm.
table stakes. But I think it took us a while.
Mm-hmm.
Um, I said this earlier about AI. I don't know if this is a technology where we might get that chance to survive long enough to catch up. Like we can't
Mm.
fall too far behind. We
Yeah.
can't get we can't let them get exponentially more efficient than us. We got to stay in the game. Whatever,
Yeah.
leveraging these tools to provide consistent service to have so Kris can have three digital triplets to work with him so he can be four places at once and
Right.
his triplets can take care of things that he doesn't have to and he can
Right.
be four times or two times more efficient or whatever that ratio works out to be. Um, so if our volunteers aren't exposed to all the things that might scare them, and our leadership is their primary conduit to that information, then I think our leadership has to be equally scared. And I don't, my attitude with my boards and whether I was an EVP or a CEO was to keep them a little scared so that they would entrust us to do the right things to change the organization. But
Mm-hmm.
I spent most of my career working at organizations that needed a lot of change. So I needed the board to
Right.
buy in.
Right.
We needed to come in and say, look, this is what it was, and this is bad, and
Right.
this is what good looks like. And I want you to hold me to this standard. And we're going to spend some money and we're going to bring in some talent and we're going to create a culture and we're going to perform to these things that we tell you that this is what it looks like.
Yeah.
And so they needed to be a little, oh God, please help us do these things. So that's just how I spent almost all of my career. I mean,
Yeah.
you know, so I don't know. I don't think we're scared enough not to go, oh my God, oh my God. But
Sure.
we've talked about a little bit of this in the past is what happened, let's say just throw a number out there and say the credit unions have 25 years. There's a date before that where it's going to be too late to do anything
Mm-hmm.
to survive. And I don't know if that's 10 years before that. Like, okay,
Right.
the hole's too deep now. We're never getting out.
Right.
So those are that's my sort of worldview about credit unions right now is there is a date. There are things out there lurking. Regulations have protected it. Regulations are sort of a moat. If you think about it, if you're a for-profit Fortune 500 focused on earnings per share every quarter, you don't want to be a financial institution. Our ROEs suck, right?
Mm-hmm.
And so, but you do want our loans or you want our payments because that's where the real money is.
Mm-hmm.
But you don't want to be a regulated. So those are the kind of things that keep us from being bought because nobody wants to own a financial institution. They
Right.
just want your best members and your best products.
I think that's a really good example about regulation, right? Because there are people who look at regulation as a burden, and
Mm-hmm.
there's people who, like you say, yeah, it's a burden, but it's a moat. It's something that protects us, right?
Mm-hmm.
I would argue, going back to your point about some people getting down on you about being too negative, right, or too much
Mm-hmm.
fear.
Mm-hmm.
The only reason we're fearful is because we know there's a more positive future that could be. And
That's
it's,
fair.
that's the other side of it. If I just let things go the way they are and we don't in fact make change, then the brighter promise of the future out there we may not be able to recognize. Right? It's the other side of the coin. It isn't negative for negative sake. It's to
Yeah.
say that there could be something better here, guys. And people will sometimes hear that and hear negative, right?
Mm-hmm.
But really, what you're talking about is the opportunity for positive change.
Mm-hmm.
So, in your career, what are some of your foundational memories? What are your core memories around, working with your leaders? You talked about working with the worst boss, right? What did you learn from your worst boss? Because I always think there's something you can learn from people. What did you learn from your worst
Wow.
leader?
I guess I would, the things that I always think of. So I have to think about my memories are this, therefore my learnings are that.
Mm.
And my memories were always coming back from his office, having learned some new cuss words, going into my office, and probably about every 10th time I went back in there, I probably grabbed my phone and threw it across the room and then
Mm-hmm.
went to the supply room to get a new phone.
Mm-hmm.
And that's real story. We had at US Central, we had a supply room of extra phones because the trading desk always something, once a month, somebody would deny a trade. You just placed $100 million with Goldman Sachs for 2 days. And they said, that wasn't the rate we said.
Oh,
Yeah, you know, and bang, there went a phone. So I guess I would say it has to do with truly how you care or respect your employees.
mm-hmm.
Um, Now, at the time, again, being a 24-year-old kid who was just blessed to have the job he had, it was just, and having come out of public accounting where your bosses were 24 years old because you went from client to client to client, it was just this little team of kids. So I'd never really had a real boss
Mm-hmm.
until I left US Central to go to 66 Federal. And so,
Mm-hmm.
then to have the contrast to go, wow, he was terrible.
Oh, so
Um,
you didn't know he was terrible until you had your next leader.
No, he was my first real boss. Like you went into the office every day and had a boss, and he
Right.
was this. I mean, and he worked for the Fed. He worked for Paul Volcker. I mean,
Mm-hmm.
this guy's a beast, but
Yeah.
he just had horrible people skills. We
Mm-hmm.
were irrelevant. We were a cog. We were just
Ah.
another thing. We just go do your thing. Go do what you're told, or do what's expected. And I didn't know any better. So it didn't leave the kind of impression it probably should have until I went later and went, that was bad.
Yeah, you didn't know at the
No,
time,
I
right?
didn't. No, my next boss came to credit unions from the HR world. He
Oh,
literally had been in HR at a company and they started a credit union and he became the CEO of a credit union out of the HR department.
wow.
So he knew nothing about financial services, but he knew
Right.
a lot about culture and leadership and how to treat
Hmm.
people.
Mm-hmm.
And at first I thought he was wackadoodle, like, oh, this hooey people crap culture training. I mean,
Right.
that was how so, I must have been quite a project for him.
How would you describe your people management today?
Um, Very empowering, caring, you know, um, the team is everything. That's all that really
Mm-hmm.
matters is the team.
Mm-hmm.
We know why we come to work every day. We've been virtual since 2007,
Mm-hmm.
and which was quite a shift because I love walking down the hall, grabbing a cup of coffee. Kris, I was thinking about this thing the other day, and
Yep.
just doing this, right?
Yep.
And of course, not having teams or any of that kind of stuff until 2021, right? We were just the old conference calls, and so that really strengthened our team was the ability to do this, see each other.
Right.
It made worlds of difference for us. Um, and so, for me, it's about team first. Focus on the vision and believe it, and go accomplish whatever you're supposed to accomplish.
Hmm. Can a 24-year-old coming out of college expect to be a credit union CEO in the future?
Whew. Well, they can if they want to go work for one that's about to go in the crapper and nobody else will take the job.
There's some advice.
That's right. Go look for the worst credit you can find. They'll probably hire you. Um, I think. I mean, again, it's hard. I feel blessed. I don't know why Larry hired me to be chief of retail. I don't know why that next board hired me to be the CEO of their credit union. Um, but so right place at the right time, lucky.
Mm-hmm.
But yeah, I do. I think that this industry can, it, in our heart, we are different. We
Mm-hmm.
are.
We are.
In our head, I'm not sure we are. But if, I mean, in here we're a credit union, and here we're a
Mm-hmm.
financial institution.
Mm-hmm.
And, if we can find a way to run our credit union with our heart, and that's hard. Like uh, I mean, and that's another sort of evolution of my career. Having worked for Larry Knoll, the HR credit union-y, drippy, you know, person, and then becoming CEO of a credit union and hiring several bankers to work for me who taught me what it meant to run a financial institution,
Mm-hmm.
and the fights and the battles we went through
Mm-hmm.
to blend that together into a well-oiled machine. It's, how, this thing of how can we run our credit union with our hearts and still live up to the metric? Like, how do we know we're doing that? How do we measure
Yeah.
that? How can we perform to that? I don't have an answer for that. I'm working on one.
Mm-hmm.
Um, and hopefully I'll have that for you before I retire.
Mm-hmm.
Um, but I think that heart piece is how we can be different, and I don't think we have really grasped it and put it out in the market, out in the world, and said this is us, and we move this way, and we believe this, and everything we do is about this. And it's in here. I think we're really good with our staff in that way. I think a lot of cranes lead with their heart internally. I don't know that you always see it in their brand and how it can really be out there in the way we serve our members.
Are credit unions an industry you would recommend to young professionals today? And if so, what advice would you give to somebody starting out?
Wow. Everything I'm hearing is learn how to use AI, and wherever you go, you'll be valuable.
Hmm.
Like, AI won't replace you. If you're the best user of AI in the organization, you're going to be the most valuable employee no matter what you do.
Mm-hmm.
So, assuming somebody had that kind of capabilities in their tool set,
Mm-hmm.
I'd say do that. Do you want to
Mm-hmm.
work for a credit union? I'd say it's a great place to work. I would say you will love it. You will enjoy your coworkers. You will feel good about what you do and your attempt to do something that feels good in your heart.
Mm-hmm.
Um, I guess if you have the right skill set and you love doing that and that makes you happy for 20 years and you don't have a credit union in 20 years, then you're going to be a valuable person that's going to have a resume that lets you go do something else for the next, maybe you're going to have 3 careers, but you will enjoy working with credit union people.
For sure. For sure. That's a great answer. And I think, the ability to use AI, the ability to work in finance, that is broader than any institution. Right.
Right.
So one of the things that many young people are interested in is they're redefining the types of roles or the type of how they want work to fit into their lives, right? They're seeking this work-life balance, right? Tell me your philosophy on work-life balance. Is that something you were able to achieve? Is that something you've done well? Is that something you would have done differently?
I would say I'm really bad at it. Early in my career, it was probably about success of the organization and putting it first. I mean, when my kids were young, I made time for them. I coach baseball. I would walk away from work and I would go to baseball practice and I would go to baseball games and soccer games and all the things. But I would say that's probably the only part of my life where I really balanced it well.
Hmm.
Because it was about how are we going to be successful. Even today, so the kids are grown. Heather and I, we spend quality time together, but she's an enabler. she works a lot also. And so most Saturday mornings we'll wake up, we'll have, a cup of coffee, and then it's okay. So how many hours do you need to work this weekend? Like, what's your bare minimum? And we go, okay, great. So 3 hours. Do we want to go ahead and do that this afternoon? You want to wait till tomorrow afternoon? We might check the weather. What are we going to do? But we enable each other to work too much. And so for us, that's balance because we are doing it together, right? It's like, I think if she said, I'm not working at all, then I wouldn't work at all. And we would, she does taxes for hobby. She has about 100 tax clients. She's had them since she was 18. I know. And so for me, again, in the wacky world of lack of work-life balance, that means from January to April, I'm going to get to probably work at least 8 hours a weekend because she's going to be doing taxes. And just think of the words I'm using. I get to work.
Yeah.
I love what I do. I always have. I love making the organization successful. This may be a really bad way to use this story, but when I became CEO of that credit union, we had no administrative facilities at all. And so my office was in the back of a branch. The CFO was in the basement of another branch, et cetera, et cetera. So I had to walk through the lobby to my office every day. And there was this woman who she was sort of right at the edge of the lobby before I disappeared down a hall back towards. And when I got there, the organization was atrocious, as I said. I think our delinquency was 2%. Our ROA was 0.2%. Everything, any ratio you want to talk about was backwards. And so we just had a lot to do, and we set out to do it. But probably about 3 years in, she told me one day, she said, when that first year you were here, I hated you. You walked past my desk every day and I just hated it. I used to be able to sit around and talk to my friends all day, and we would just, it was really a lot of fun. And then you came in and, set goals and, made us, have to make loans and, it made me, I hated it. She said, but then you started recognizing us when we performed, and we implemented this profit sharing program so we could get quarterly bonuses. And all of a sudden the joy was about the accomplishments and the success.
Right.
And it was like, so the dark side of that story is it just told me people like working hard and people like being successful. So we're going to do that. But people generally do. Like they like being rewarded. They like being acknowledged. Everybody thrives on different incentives,
Hmm.
but I mean, we would get together once a quarter and have these big pizza parties and hand out their quarterly, we called them gain sharing checks because we didn't want to
Hmm.
say the word profit because we're a credit union, and so we can't
Right.
say that. But it was just the joy and the enthusiasm for people to be successful and win.
Right.
It was infectious, and so, I just say that to say that, and we work way too hard at MDC. Sarah and I, Sarah and I
Hmm.
we've been probably spent the last 12 years every year going, how are we going to work less next year? And we suck at it every year, and we're still working way too much. But we love what we do, and
Yeah.
it just we do it partly because we have to, because we don't feel like we have the money that we don't want to spend our owners' money, so we
Right.
work a little harder. But I think we like success, and we like taking care of our members.
Yeah. Yeah. There is there is emotional satisfaction out of hard work and seeing
Hmm.
it through.
Hmm.
And I don't know about you, but almost everything I've learned through work. Right.
Yeah,
Rarely do you sit around and learn things. Right.
yeah, yeah.
And if you're passionate about learning things, you're passionate about putting those things into action,
Hmm.
which is oftentimes work. Right.
Yeah, yeah.
Um,
So don't use me an example to help these kids with their work-life balance, because I don't. My goal in retirement is to jump on the other side of the fence and be just as
right.
out of balance. I'm just going
There
to
you go.
play all the time. I just, call me if you ever need anything. I promise I'll answer the phone, but don't ask me to work. I'm just going to play.
Well, we'll have to find the opportunities to play then, Jeff.
That
That'll
sounds
be what it
wonderful.
comes down to.
I love it.
Um, and I don't know how comfortable you are answering this question, but what do you think your legacy is, or your legacy will be?
This is hard. First of all, it's hard for me to use the word I about anything. Yes, I took a job. But I can't think of anything that wasn't ultimately at least two of us, if not a team of us,
Mm-hmm.
So, um, the things I would like people to remember about me was that I worked my ass off and I really, really, really cared, you know.
Mm-hmm.
Um, there are things that got accomplished on my watch, that I'm proud of. Um, Taking that credit union from a zero point 0.2 ROA to a 2% ROA, and from a 2% delinquency to a 0.2, building that team. That was my first as a CEO,
Mm-hmm.
having worked with the HR laden, culture first Larry Knoll, bringing in these bankers and them teaching me banking and me teaching them credit unions, and creating this team that would go through a wall to be successful. That
Mm-hmm.
team, um, the taking those two organizations and creating culture and fixing culture and leading and being successful. And I have to throw MDC in there too. I mean, I was one of three employees, two of which worked in Cubes in Madison, when I was hired. And we reached a point where we had almost enough capital to last a year at one point. We you know people didn't very few people looked at MDC as a standalone company. It was sort of like there was this QSO, and we all sort of were
Right.
some. There were I'm going to say 20 or 30 credit unions in the beginning of this thing that helped form it, who
Mm-hmm.
really believed in it, and they got it. And we grew up and became, I hope, what they thought we could be and more.
Mm-hmm.
Those coastal and teachers, and I'm going to stop because I'll miss somebody,
Mm-hmm.
but those credit unions and those leaders who saw this thing, but there were very few that looked at MDC as this sort of entity that went, if it disappeared tomorrow, I'd be sad. The others were kind of like they were just there, and the staff just thought of us like another department of CUNY Mutual. Like if MDC disappeared, they just bid into another department,
Yeah.
right? And so for us to go, does anybody care? Why does this matter? Why should we matter? Why we're going to have to ask them in a couple of years to start writing us checks every year. Why would they do that? And to go through that at a time we had 250% turnover on our board. So every time we thought we had a vision, the board would shift enough that we'd shift. So we spent 5 years bouncing all over the place. And then there was this light on the horizon, and then it took us a couple of years to realize it wasn't a train. Like it's really a light. Like we're really going to make it. So, and somehow then, because it exists, what did it do for the industry? What is in the industry today that wouldn't be because we didn't save MDC? Like See You Next Gen and Circle and whatever good they've done. And you're right. And did I had this much to do with the creation of Constellation. It was you and your team and all you guys did with an idea and some research that MDC did. But you're right. You're right. And so I think somewhere in there, I'd like to be able to go, I had a little bit of something to do with saving MDC, and this thing we created, did all these amazing things. And whatever Circle goes on to do, creating more things, and whatever great things Constellation does, or See You Next Gen, or Modern Fi now, or, and so somehow I'd love, that would be somehow to go, remember that Jeff Kline guy and, the MDC and, something like that, I think would just be, look, I didn't do any of those things, but I'll take some credit for saving MDC.
Yeah, you definitely created the environment.
Yes, that's what we did. Valuable. That's right. It is the thing. That is what we did. Is we created this network of great credit unions who love being at this place that exists, the culture, the collaboration, the innovation, the scale that you guys can throw at something, that makes it more attractive to others outside entities who want to be part of this thing. So it is that environment, that network, that sandbox, whatever labels you want to put on it. So somehow it's in there somewhere.
So MDC was, let's say you came back for the 25th anniversary.
Which is going to be in February.
Of MDC? Okay.
My last meeting.
That's amazing. That's great. Yeah. Let's say you came back for the 35th.
Okay.
What does MDC look like, do you think?
Oh, wow.
What's the future of MDC? It's so important to the industry.
Well, I think the new CEO will be a lot more dynamic, and I whatever we become, we've just laid a foundation. Like there's something, right? I hope that they are the industry driver of AI into credit unions, that they can be that force that will empower everyone, because this is going to be a big, expensive thing.
Yes, it is.
I don't know the numbers, but we hear numbers like $10 million a year for like $1 billion credit union. That's a lot.
Yep.
And so if let's just say of that 10 million, what if 70% of it could be spent collaboratively, and you could spend 30 million on 100 credit unions.
Yeah.
And then each credit might still have to spend its own 2 million to take whatever, but the ability to do all that in a collaborative, consolidated way, because it's sort of like the engine's the engine. Here's the engine. Now this is how you're going to use the engine at your credit union.
Right.
So I would love for that. And how long is AI going to be like the thing? Is that 6 years and then there's a new fad, or is this it? This is the thing. And so I feel like that's a place where MDC can really put their stake in the ground for the next 5 or 10 years, right? So I think that there's probably some things I haven't even thought of, which is why I'm so excited for a new CEO who would just come in and go, "Who ever thought about this?" No, we never let ourselves think that far out.
Right.
Because we have this in our mind, what we think MDC is. We're this, but we're not that. And they go, well, but what if you were that? And so that's truly the sort of genuine enthusiasm I have for a new CEO, is what are they going to do with my thing here? What do, like say now I'll say it, my thing, right? This thing we did, right?
Yep.
So for this one moment, I'll say this is my thing. It was a team effort. You know better. It's not
Mm-hmm.
my thing, but it's
Mm-hmm.
so many of you. It's
Well,
80 credit unions, and it's a great team. And Sarah's been here every day that I've been here plus 18 months, and
yeah.
she doesn't get enough credit for sometimes pulling me, going, we should do this. No, no, yeah, we should do this, and she doesn't get the credit she deserves. And
She's been an amazing yin to your yang for
that's
sure.
right. That's
Right.
right.
And that's what every good
Absolutely.
leader in my mind needs is you need that
Yes.
balancing force. Right.
Let him run. Just let him go. Okay, I don't know if I totally agree, but you run, you go, you
That's
make
right.
this work. And
That's right.
so yeah, so there's it's and you start naming people and then you forget somebody, but we've had
Right.
some great chairmen, we've had some great board members.
Right.
John Carew, how much,
Mm-hmm.
think about just behind the scenes, the heavy lifting he's done
Yep.
with Constellation,
Yep.
with C Rails, with Circle, and so there's just people out there that just sort of are part of the story.
Yeah. John is definitely the QSO master.
Right. Right.
or the QSO whisperer,
That,
right?
there you go. That's
Because
right.
he likes to strongly support, right, from
Yes.
behind,
And
right? But
he's a hard worker. I mean, he will
oh
put
yeah,
in the
super hard.
time.
For
Yeah.
sure. For sure. So, well, let me just close, Jeff, by saying really a heartfelt thank you. Thank you for what you've done for the industry, what you've done for credit union members, what you've done for executives like myself who've had the opportunity to work with you and to learn from you. It is a place of I have been very lucky personally to been invited when I was so young to come be a part of MDC. Chuck Purvis, one of my
Hmm.
many mentors,
Yes. Right.
right, invited me when I was very young to be a part of MDC, and
Yeah.
I think I've been there since the late 2000s.
Hmm.
So
Hmm.
at this point, it is watching you what you've achieved, watching the team that you've built and what they have
Hmm.
achieved.
Yeah.
I think truly says a lot about kind of everything you've learned, and it's everything you brought to bear, and you gave everything you had, right, for
Hmm.
the industry
Hmm.
and for the company. So for that, thank you.
No, and thank you. Thanks for the kind words. That means a lot coming from you, because I have a lot of respect for you. And if there were a few hundred more of you out there, I could feel so much better about this industry.
My wife would disagree with you, Jeff. But that's what I love about it, right? It's the humor, it's the heart behind this industry that makes it
Yeah.
so great, right?
Yep. Yep.
Um, so I will share with you that following this on YouTube, you're going to see some videos from folks who are saying their thank yous to you. So
Okay.
we've done a little recording behind the scenes. We're gonna add some thank you in there because this is about an industry that's saying thank you to you. So we appreciate you. We love you. We hope you and Heather have nothing but fun times with grandbabies.
Yeah.
Let's get Heather off of her 100 text clients, right?
That's right. That's right. Before she gives them to me.
That's right. That's right. That's right.
That's my
And
biggest fear.
short of having to watch the Chiefs win more Super Bowls, I wish you success in all of your hobbies and endeavors, my friend. You have earned
Thank
it.
you, sir. Thank you very much. I truly enjoy spending time with you every chance I get.
Well, this won't be the last time, but
Well,
thank you, sir.
thank you. Take care, my friend.
Congratulations, Jeff. It's really cool to see where MDC is at the end of your tenure. And some really big industry-changing initiatives have come out of MDC. And I tell you what, I don't think any of us know the impact they're going to have yet. You're moving on to the next chapter, and it'll probably be decades before we understand how some of the things like Constellation, like Circle, and many others we could list have changed this industry. And you can take a ton of credit for that. And even better, you played a huge role in pulling together a group of people that can share that credit with you. So congratulations, my friend, and I can't wait to see what you do with the next chapter.
Jeff, I hope you enjoy your retirement. You have done an amazing job with Members Development Company, and I know if you were here, you'd say it was because of your team, but it's your leadership that brought them where it is.
Jeff, congratulations on your retirement. It has been great working with you really since 2014, but especially in the last several years on the board. You've been a tremendous leader. I'll never forget when you came to Ameritrust and tried to convince me to join MDC after we had just been part of a project that didn't work out too well. But your commitment to the organization, your commitment to innovation within the industry really convinced us that this was the best thing for us to do, and we've never regretted being part of this organization. Watching your leadership and watching you evolve this organization into something really special and something that's very highly regarded in the industry has been tremendous to be a part of it. So I wish you all the best going forward. I hope you and Heather have a great experience in retirement, even though I know Heather's not retiring. But I wish you all the best and hope to see you in the future in a lot of great things.
Jeff, just like I told you in person, I have appreciated everything that you have done. I have never seen someone who is so passionate about making a difference in the credit union industry as a whole, and someone who can bring that charisma and that just truthfulness about it. You're always looking for something that's going to make us better, and we always need that type of person. You're just like the mentor, the older brother, the one the hype girl, but not a hype girl, hype man who's always there and making sure that we keep our eyes on the road and bringing all of these things to the table. And I thank you for that, because it's been fun to watch how it's grown over the years and all of the different things that we are now involved in. And it's because of you and your leadership and just you keeping your eyes down the road and keeping us focused on task, but doing it in a way that is inspiring and doing it in a way that keeps our feet to the ground at the same time. So I do wish you the best, and I will miss you. It's not going to be the same not having you here, but I am happy that you're ready for this next part of your life, because everybody deserves that, and we wish you the best. Thank you for everything.
Jeff, I am so incredibly happy for you and Heather on your retirement. I will miss you. I want to thank you, very honestly. You have been to me a mentor. You have been almost like an uncle in this business, in this industry. And the reality is that without you, Constellation may not exist, right? Meaning I may not have this job that I have today. So I just wanted to say thank you for everything. Thank you for your leadership. We all hope that we come into this industry serving others and that we leave it better than we found it. And I will tell you that there is no doubt in my mind that you are leaving this industry better than you found it. Your passion for it, your energy, your excitement has crafted a new generation of leaders, both in the team that you've built and the teams that you have influenced. And for all of them and for myself, I just want to say thank you. Again, thanks for your partnership, your friendship. Enjoy retirement. It is well earned. Enjoy those grandbabies. And we will see you very, very soon, my friend. Be well. I'd really like to say thank you to Jeff. He's made such amazing contributions to our industry, and I am very grateful for the opportunity of having worked with him. If you like the content of this episode, please like and subscribe on your platform of choice. Thank you for joining us today. We will see you next time.